TGIF, everybody. How's everyone doing today? Good morning, Brock, Stavros, Itai, Zayed. Yes, we always start at the top of the hour, Zayed. Everyone doing okay? So yesterday I was screaming sell the S&Ps, had a pretty good break. We had some great earnings yesterday after the close. Google was up, I don't know, $60, $70. Intel up big. What does that mean? Thank God I found ForexAnalytix. Thanks for the setup, Ed McMahon. How are you, Zig? So to me, this looks like a flagpole. I think we've rallied 50%, maybe 61.8. So we'll see if this flagpole holds. You know, most bears are waiting for 30-40, 30-50 where there's sell zones. And I don't know, maybe we'll have another from here. We have another one of these, you know, where, you know, you had a directional break and it just kept recovering and making new highs. I don't think so this time. And here's really the bottom line on the S&Ps. It's a 4-hour 50 MA. That was right around yesterday's low on this big negative candle, and it held it. I thought it was just going to hold it for a candle or so. Instead, we're getting a retrace, or maybe we're just going to blow because of the Fed next week. You know, I think the markets try and make things as difficult as possible. So the easiest thing to do is to buy the break and say, I'll get out after the Fed. Everyone with me? So, and, you know, I'll get out at new highs, 30-40, 30-50 after the Fed. You know, we won't get the Fed decision until Wednesday. And especially if we fade Friday, we could have a pretty good break going into the Fed and have a failing rally on rate cut. So something to keep in mind. Dixie held exactly where it had to yesterday. We talked about this earlier in the week. Once we penetrated this, we had a discussion about head and shoulders not happening at market tops and bottoms, but as continuation formations. And we came back on Draghi and tested it and recovered. It's done nothing wrong. I think 98.40 to 99.20 is the next stop. EG battled back during that time, and we're right back to where EG can be good or bad from here, right back at this 89.50. See how important this 89.50 area or so is. So tempting. That's the only new thing I did today was some of the shorts I covered down here, just putting some out. Pretty tight stop. I'm going to get out over 85 if we start taking this out, because if that happens, we could actually have perhaps a rally back towards 90, again 91.20. But the week, although we've had, you know, and that's what you do on Friday is you look at the week, we're right at the 2-week off number. So we needed a close under 89.58, and we're right there at the off number. So giving that a shot. And back to the S&Ps, we're not that much above the 2-week off number. It's a pretty good week. You know, besides yesterday's break, if you look at the weekly candle, it's all blue. But the 2-week off number is 30-10-40. So let's see if it could hold 30-10-40 going into the close. If it can't, that would be another indication, a 2-week reversal, that we may not be going to new highs. But, you know, I've tried to top pick S&Ps about 1 million times over the last several years, sometimes successful. But, you know, many times all the signals I get, they end up being negated. But this is a pretty directional, or I think Steve would say impulsive. So really, this is your first sign that the top is back under yesterday's low, this 29.96. And as you can see, besides the support level at 29.60, you have The 50 on the 4, and on the daily, 2960 pops up again. No, it's all the way down at 2920. So if we do fail, this is kind of one of my speed lines that we could go to. It's down here, 2880. So here's the 2960. It's on the 4-hour. So I look at Aussie Kiwi, and I thought we'd have one more drive to the downside. And then I'll just get to the metals and hand it over. So we have this formation here. It's a wedge or a channel. And maybe next week, unless it's already turned off this trend line, we could still have, let's see what kind of week we had. Closing as in the green. That may have been it. I know yesterday Amelia's looking to short this thing under 104. That's what makes the market. I think I'm going to try it down here if we get to the 78.6 level next week, and that comes in at 103.72, about 50 pips from here. US dollar yen had a good week. It's challenging that 109 level that it got rejected from, which was a breakdown out of a big triangle. I'm constructive. I'm bullish yen. The only caveat being, if I'm right about a break in the S&Ps, if it's going to happen, you would think that we would get some type of safe haven buying in the end, and that would take it down one more time. And Bitcoin, I think it had another lousy week. I have a couple of lines that intersect on the daily way down here. So if this gives way, this 9,000 level, I still think we could see lower numbers in Bitcoin, not new lows, but lower numbers, possibly into the 7,000 range. We'll see if it holds here or not. Not doing anything since the February time frame in any of the cryptos, and wrap it up with rates. So 10-year keeps trying. I mean, I look at this chart right here. We're back inside of the wedge, but what was that chart? This kind of looks like a flagpole too, kind of the inverse of what we had in the S&Ps. And to me, it looks like it's flagging. This is the 1 hour above all these moving averages. See what the 4 looks like. Yeah, kind of the same. So, I know a lot of people thought we could at least get to 217 before rates headed lower, and we'll see. TLT is hanging on by the skin of its teeth right here. This is a 20-year. So as you can see, we're right here. Here's your daily, right at the line. Okay. So this really has confluence at this 3080 level. We get through that. This was about a 5-point break. 5-point break from here is going to give you 26, 25. And the weekly, we don't have a 2-week off number still, but under this week's lows in TLT, it's pretty vulnerable for at least a correction. Why can't we pull back to 24, 25, where the market really started to accelerate? So a lot of answers we're going to have next week. Really, it seems like the market's just hanging on, waiting for the Fed. We'll see if we have some direction, and they force people out of positions that a Fed rate cut would help, which means who wants to go home short stocks? Who wants to be short stocks, short bonds into a Fed cut? My guess is no one or very few people would do it. So sometimes the hardest trades are the biggest rewarding trades. Amanda Zayed, you have to go into our private chat, and Amanda is there moderating and sharing her work and her trades in there. And you have to be a member, so you could at least take the trial. There's a link right here in the room, I believe. Okay, you're very welcome. I agree with you. She's great. Hard to find anyone that's not great in this team. Maybe me, I'm mediocre, but really have, I think, the best team of any analysis research company out there. You're going to want to check out these guys. They had, this guy long term has like an 80% hit rate. Stelios. You'll hear from Steve after I hand it off. He's one of the best disciplined traders I know. Paulie Franco's another big benefit. Joe is our point man and our spokesperson for the firm on many major media. He's been on Bloomberg many times and Real Vision. And Paulie does a couple of shows. One's free, one's you have to be a member. And he goes through a great spreadsheet with all the key technical areas. And there's Amanda. Her reputation precedes. And Andre is going to be with us today, take some harmonic looks, kind of back up the team. And Blake will be back Monday. Hope his son learned how to block every shot at every angle over the last 5 days in Wisconsin. So I want to thank everyone for hanging out with us this week. It's our mission to build you up and edify you and give you ideas to consider. And just like anything else, even, you know, with a team of pros, you don't take any kind of trade blindly. But you can look at what we're doing and what we're recommending. So here's some pattern and play trades. Andre is still short, looking for 88.09. That was 100 lower than this week's lows on that. Andre's on it on pound Aussie too. So we have a very nice hit rate. I think the upper 50s on these pips. And you get Elliott, harmonics, basic tech, candlestick, macro. Really no reason to leave the site. You could set up your own Twitter feed here. The only reason you would leave the site is to go to your trading platform. So it's all here for you guys. The way to say thank you if Face has given you good ideas and you've made some money based upon some of our coverage. Maybe you were short EG coming in this week. We were all pounding the table on that. The way to say thank you is to join our trading family. So with that being said, Steve, are you around, buddy?
I am. Good morning.
Absolutely.
And he is as well.
And Stel, good morning. Good morning, Steve's plural.
How's it going?
Good morning.
Stelios is plural. How come Steve
Yes.
took the Americanized version and you didn't, Stel? You know
I don't know. He's always the advanced one, you know.
yeah, I think it's because Steve loves American politics.
It would have been confusing.
Right, Steve?
Confusing to have two of us, right? With the same name.
Yeah.
And with such similar voices as well.
Oh yeah. Stel, anyone ever tell you in Greece, ask you if you're from the UK?
It's happened a couple of times. Yeah.
You kind of have a little, you know, from being there for a while. You
17 years, man. 17 years. They rub off with you.
Yeah. They say to me, Dale, are you from New York? And I get pissed off because Chicago's a little different. Anyway.
Joe says we both talk a lot. Thank you, Joe.
So what's new? What's new, Stel?
Well, there hasn't been any big overnight news. The market's still trying to digest the ECB from yesterday, and with the Fed coming up next week, it's going to be interesting because if the ECB had done something yesterday, which they didn't, okay, they announced they're implying basically that there's going to be a package of more loose monetary policy, but if they had done something, that I think would have made it much easier for the Fed to go deeper than they probably would have. But they didn't cut, they didn't announce anything straight away in terms of more QE, and we're going into the Fed next week now with the same uncertainty that we had last week, and that is the market's pricing at 25. It's pricing more than 25, actually. It's pricing some more like 30, 31 basis points, so like 50% chance of it over 50. Will that come? We've discussed it before. I don't think it will, but I think the market is justifiably pricing a little bit more than 25, and that's because we've seen it in the past recessions, in the past basically downturns. The Fed has been very quick in the beginning. They've started pretty much almost every time with a 50. And I was looking at a very interesting chart the other day, yesterday, the day before, I can't remember, but it was very interesting because it was showing the manufacturing PMI versus the services PMI, and whenever manufacturing is much lower than services, and it has been like this for Europe, for the US, manufacturing sector is really underperforming. That's almost always the precursor for a recession. So, sorry, just excuse me a second. I have my daughters here.
Okay. Yeah, very bifurcated economy everywhere, isn't it? I mean,
yes.
I mean, you could get a job at a fast food place, but not in a factory.
Yes, and I realize that the global economy is turning more towards services rather than manufacturing. It's a very different economy than we had, say, 30 years ago. But still, this is
for the same reason it's turning more in consumption, in debt-driven consumption than anything else. So symptoms of the same disease, more or less.
Yes, I agree. So that was a really interesting chart, and I'll find it and I'll share it in the chat room. It's really amazing because it shows the gap between services PMI and manufacturing PMI, and whenever there's a big gap like there is now, almost every time you get a big downturn. So
yeah, because the one indicates what's happening in the real economy. I mean, service jobs in the vast majority don't add value to an economy. I mean, they just not as much value as manufacturing.
You mean my job as a greeter at Home Depot doesn't add value?
No, services obviously do add value.
Hello, everyone. Yeah, go to aisle 3. That adds value.
Yeah, no. I mean, services add value. Like you have technology products. Like look at Zoom that we're using, to do the stuff we're doing. I mean, it does, but Steve is right that manufacturing is usually leading the way, and in this respect. So we,
first of all, let's make it simple. If we assume that you expand your manufacturing, doesn't that also end up adding service jobs in the process? I mean, think about it.
Yes.
Manufacturing is the first step, right? You still need somebody to sell the product. You still need somebody to promote the product. You might need intermediates. So manufacturing creates added value, creates actual products and service jobs.
Yes, I agree. So yes. So basically, going into next week, I mean, we had nothing to note overnight. We didn't even get anything from Boris Johnson, anything new, which was disappointing. But we're obviously waiting for the GDP print in 10 minutes from now.
It's going to be an interesting print because I mean, if we get a better than expected GDP print, that's probably going to make it even tougher for the Fed, to go through with the first hike, with the first cut. Let me clarify. I think there's a 0 chance they're not going to be cutting since the market is fully pricing that in. But that doesn't mean that they won't feel somewhat uncomfortable while they have to, excuse that. I know that they've already built, the ground by focusing so much on inflation, which there's no point because inflation in the US is on target, or what they've said as target. But, it will still be quite awkward, especially if by then we are still near all-time highs in the indices as well. I mean, indices are flirting with all-time highs still as we speak. We're like less than 10 handles, below the all-time high. So yeah, it's going to be interesting to see the GDP print. It's definitely going to be a softer GDP print than the one we had in Q1. Stelio, is it 1.8 that market is currently pricing in?
1.8, yes, that's correct.
Yes. So
And
let's see what we get.
And you know, the other thing is we've seen the Atlanta Fed model. It keeps downgrading basically the estimates going forward for Q3, I think, as well. So you know, the momentum is definitely to the low side, but you know, this is a very important number, and if it comes in, like you said, anywhere above 1.8, then that's going to make the Fed's job tougher. I still think they're going to cut no matter what.
They will.
Even
There's
if
no
we get
chance.
you know, 2.5% print, they're going to cut.
No chance they're going to disappoint what the market is expecting. I think that if for any reason they don't cut, there's going to be a massive move in the markets. Massive. Yeah. And they definitely don't like that.
Yeah, if they don't cut, I think, you know, stocks could easily go 1-2% down on the day.
Yeah, absolutely. And, you know, the dollar might end up flying as well.
Yes.
And we know that they want neither of those happening, right?
No, of course not.
How about they get a quarter and the market goes, boy, that wasn't enough. You're behind the curve, and sells off after the quarter.
I think that if we don't get a bad GDP print, it's not going to be easy for the market to consider that wasn't enough.
Okay.
That's what I think.
You know how
so I don't
addicts are. It's never enough.
Oppositely, as I've said, I think that there is a decent chance that if they cut 50, after seeing the data somewhat stabilize and, you know, stock markets have been at all-time high, etc., I wouldn't find it impossible if the market got a little bit scared that perhaps, you know, there are things that the Fed is aware of that look nasty and we're not yet aware of. Yes, exactly. So, you know, if I had to decide if there is a bigger chance for the market to be rattled by a 25 or a 50 base points cut, I think that there is a higher chance that a 50 base points cut might rattle the market.
You know, the other thing is that central banks, they always want to inspire confidence, right? They want to show that they're on top of things. So delivering a 50 could be a way of a central bank saying, look, we are here. We got this. We're not going to let the economy, you know, go on free fall because it's already turning, but, you know, it could turn a lot more. So, you know, I can see the justification for that. Whatever it takes. Yeah, I don't think they should, but, you know, I can see the justification for them doing it. So it's a tough one. It's going to be 25 or 50. I think it's going to be 25, but wouldn't be surprised if they.
Yeah, same here. Stelio, there's one more thing that we completely forgot to mention the other day.
The charts, Steve.
USD Turkish lira. Stelio, we had some crazy moves from the Turkish central bank. What was 2 days ago?
Know, I haven't seen it at all. I don't trade the lira.
I think Stelio that they cut 4.25%.
Well, I'm looking at the chart, and it's gone. USD Turkish lira has been pretty sideways for the last.
I know.
Couple of weeks.
There is definitely manipulation here, but Turkish.
Take the charts, Steve. We're still seeing Dale's screen.
Yeah, give me 1 second. I will. Yeah, I'm right. 21 hours ago, Turkish Central Bank delivers massive interest rate cuts. Interest rate from 24% to 19.75. So I was right.
24%.
Yeah, wow. They cut by 4.25%. That's what the Fed wants to do, really. If they could just cut by 4.25%, then they would be so happy about it, right?
And you know what? USD Turkish lira, it's only like down 1% today.
Yeah.
Keep in mind. Hold on.
Keep in mind. Yeah.
This is weird.
Maybe it helps them pay for the Russian armaments that they just bought cheaper. They take out a loan and they get a lower rate on the purchase.
Shouldn't could be. Shouldn't the dollar lira be going higher? What was the market expecting?
I can tell you one thing for sure. The market was not expecting a more than 4% rate cut. That's for sure. Now, The curious thing here is the following. Is the move we're seeing here in the exchange rate central bank manipulating it? Because keep in mind, if you wanted to massively cut rates, and we know why they massively cut rates, you remember that Erdogan, in essence, kicked out the previous central banker.
Yes.
They put on a new one. Guess why?
Because he didn't follow orders.
Exactly. No, they directly said that, actually.
He did say it, yes.
Yeah, the new one now directly followed orders, so he massively cut rates. So if you wanted to do that, wouldn't you at the same time have the central bank ready to make sure that there's not going to be any big move in the exchange rate? Because you know how it is. Many times, equally important to what is really happening is how the market perceives it. So if you make this show up in the markets as something that didn't move the needle, then you know how journalists are. Journalists tend to want to interpret what has happened purely based on price action. So then people are going to start articles saying, oh, perhaps the market was happy with the massive rate cut because now the market believes that this is going to produce a better economic recovery, and that on its own might help the Turkish lira recover in the medium to long term, right? So I'm pretty sure that the central bank is doing a good job holding it there. Now, from a technical perspective, as you see, this is the channel I'm monitoring, and we're actually testing support. The 200 daily moving average is a little bit lower. So it's quite interesting, and I wanted to mention it because I completely forgot to do so yesterday. Yesterday, of course, we had the ECB, so that didn't allow for much. Anyhow, we're just a few minutes away from the GDP, and the GDP is going to be quite an important print ahead of next week's Fed rate decision. 3 minutes, actually. Anything else, Stelio?
No, I'm afraid. Sorry, what's Joe is saying? Joe is asking, he's saying, if there's a question he's heard, why is the Fed cutting with full employment and stocks are all-time highs? It's a good question. And my personal answer is because, okay, the Fed has a dual mandate. One is employment, the other one is inflation, and arguably inflation is more important. Inflation has been their preferred measure. Core PCE has been persistently below 2%. But most importantly, many of the leading indicators have turned quite a bit lower, and there is growing global uncertainty. And all this can snowball. And also, let's not forget, Trump wants lower rates. So that's what I would say.
The main reason is because there are elections in 2020, I would say. Now, having to do, Stelio, with Fed's dual mandate, I'm of the complete opposite of opinion. Theoretically speaking, price stability is the main mandate, but I think that is only on paper nowadays. I think that we're going to even more clearly see within the next few years, that if the Fed is willing to abandon one of its mandates, that is the price stability. They've already guided forward in any possible way that they're more than willing to let inflation run hotter. So I think that their true mandates at the moment are two. One, asset price stability.
Yes.
Two, employment. I think they couldn't care less about inflation.
And by asset price stability, you mean a slow grind higher, right?
Yes, exactly.
Yeah, it's. I think what you said before about elections is spot on. There's no way they're going to want to have any kind of an equity, not a meltdown, but even a proper sell-off ahead of the election.
If for some reason in 15 months from now, stocks are tanking, and I'm not even considering the possibility of getting destroyed, right? Just, having a bad stock market, I think that the chances of Trump getting re-elected, and I think more or less everybody agrees that, even Trump agrees on that because he has made that his flag, you know what I mean, are zero.
His benchmark, yes.
Let's see, by the way, less than 10 seconds. So let's see what's going to happen here.
Yes.
Time for the GDP. Under or
Okay.
over, tell you? Oh, better. 2.1.
2.1.
2.1 versus 1.8. That's definitely going to make it a little bit harder, as I said, for the US to for the Fed to excuse the cut. But anyhow, the cut is coming. There's no question about it. It's going to make it even harder for them because probably following this, the market is going to start pricing in a little bit of a lower chance, obviously, for a 50 base points cut. Let's see. Let's see. I still don't think that the market is going to end up pricing anything less than 25 base points, but I think that the market might settle by pricing exactly the 25 base points that we're getting.
Yeah.
So far, I'm not seeing any huge reaction. Yes, the dollar is appreciating somewhat. We see the Euro USD here being at the lows of the day, cable pushing the lows of the day, but nothing really significant.
Core PC price is lower than expected. Thank you, Joe. So that's might be.
Yeah, that's positive for them. I mean, they will keep focusing on inflation. Use the yen at the highs of the day. Anyhow, dollar appreciating in general, but nothing to write home about. I mean, it's normal that we would see some kind of a dollar positive reaction following the GDP. Let's see if we're going to get any follow through, or the market is going to, stubbornly keep focusing on what's happening on the 31st of the month, because so far the vast majority of the currency pairs have been refusing to produce anything huge. Of course, there are some exceptions, and I'm going to go through them as we speak. Mostly, I want to focus on some of the commodity currencies because, as I was writing yesterday in the chat room, and I put some updates as well in the afternoon, late morning, if we're talking about US time. I pushed some updates yesterday showing that both the Aussie and the Kiwi were testing important trendline supports. And as you see, Aussie has broken now below it, and the same is true for the Kiwi. So this really puts in question the the form of the rebound that we had in hand, because it's now quite obvious that there is a huge danger that the rebound that we had was purely corrective. I was constructive as long as Kiwi broke above 67.10, and the equivalent level for the Aussie was this one, this 70.30 to 70.50 area. Actually, by breaking above it for like 1.5 days, the Aussie also triggered this inverted head and shoulders formation. You can see it here marked with purple. And then it just reversed lower, and this is today so far. And probably, I mean, I see no reason why it's not going to close negative on the day. I mean, we got a good GDP print. We don't have any really big data coming for the rest of the day. So this is going to be the 6th consecutive down day following the break higher for the Aussie USD. I bet a lot of people got trapped at their worst possible entry levels here for the Aussie USD being long. And as you see, the Aussie USD is actually also threatening, not only has broken below this potential pennant wedge or whatever you want to call it, but is also threatening now with posting a lower low. So even a higher chance that whatever the rebound was, it's done and over, and Aussie is looking to trade even lower from here. So Aussie failing, Kiwi failing. I also yesterday updated the USD CAD showing we were still somewhere in the middle of this little flag that you see here, saying that we're still monitoring the USD CAD being in the flag, and another push higher should start targeting higher levels. And there we are, we're breaking above this little flag. Even if we just want to extrapolate what that would mean just by fib extending this, that would target, this little bull flag would target 132.60, as you see here. So, there's still more upside coming probably for the USD CAD, even if this is simply a corrective bounce. So Aussie breaking lower, Kiwi breaking lower, USD CAD moving higher from there. USD NOK, I'm also closely monitoring this, currently testing this ascending channel's resistance, but keep the big picture in mind. The big picture is that the USD NOK still remains since November 2018. So it's already been like roughly 8-9 months that we've been trapped in this big range, 840 to 880. So, it's not going to be a surprise if we continue moving higher, and definitely an eventual break above 880 is going to be pointing to, to a larger appreciation for the USD NOK. If you want to have a look at it on the daily chart, you can see that that is definitely not going to be a surprise, simply because the USD NOK had a massive, massive move higher. We're talking about a multi-year move higher. And as usually when something like that happens, then you need a long period of time to correct in time and somewhat in price, this big bull trend. But eventually, if the move that follows is like this one, which has clearly corrective characteristics, eventually you end up breaking higher. Exactly as we saw, it's a very, very similar pattern with what we've seen with the bunds. So is the USD NOK in essence a fractal of the bunds and lagging? Because if we go to the bunds, you'll see that the bunds in essence followed the same pattern. What was that pattern? Prolonged consolidation correction lower. Once they broke above this, a period of consolidation within a rectangle. Does that remind you of something? USD NOK, a period of consolidation within a rectangle, and why not the same kind of resolution as the one we saw with the bunds? An eventual break above 880 and an acceleration higher. So I'm not a fractalist, but I'm monitoring enough markets and frequently enough to not be able to take out of my mind that these two look so similar that I cannot disregard this obvious similarity. So same type of pattern, same type of consolidation. I think that if and when this market breaks above 880, there's going to be a lot more upside. Of course, 880 has to break first. And, even if you want to see, look at this, as a shorter term trade with shorter term objectives, what would you do in this case? You have a rectangle, a very well-defined rectangle. Its height is 0.40 here, right? From 840 to 880. That would imply, just from a rectangle's perspective, a move to 920 up there. So a very decent trade one way or another, right? So I'm monitoring USD NOK. I remain patient and looking forward to an eventual breakout. I'm probably going to trade this breakout. Now, obviously, crude moving lower is going to benefit that. There's no question about it, right? I mean, weak crude oil prices are going to be negative for the NOK, so positive for the USD NOK. So those two things might happen at the same time, one collaborating the other. And as I've said before, the line in the sand here for crude is roughly 54.50 to 54.75. If you want to look at it on a 4-hour chart, there it is. Doesn't really matter how you draw it, but you can easily interpret this as a corrective formation. So an eventual break below that horizontal support area is going to be pointing to further losses for crude. And, as I said, that should produce higher USD CAD, higher USD NOK moves. Let me have a look at a few of your questions. And I know that we have Paulie with us. today. Andre is also with us. They definitely have interesting stuff to share. So let me start by looking at the chat. Let's see. Oh yeah, I also have some questions from the chat room I want to answer. There was one question, what is happening with the USD yen, and cover that. And there was also one question having to do with the pound Aussie. So let's begin. By the way, very briefly, nothing to add for the cable, nothing to add for the euro. Cable remains trapped within this descending wedge. Obviously, a break below the previous low is a bearish event. In order for me to turn bullish, I want to see a break above the descending wedge, but even most importantly, above 125.80. So, you know, unless it breaks above 125.80, I have absolutely no reason to be short because it's already a trend that, you know, is quite exhausted. So there's no risk reward to be short. But I find no reason why I would want to try to catch a falling knife and buy it as well. So in between, there's nothing to do. I would rather buy it if I was to do something with it at some point, which I doubt it. I think there are better opportunities out there. But as I said, only if we break above 125.80. Now, having to do with pound Aussie, pound Aussie, first of all, first comment here, it reversed higher after perfectly reaching this flag's target. So as you see, the measured target of this flag, expanding triangle, doesn't matter, they have the same, depends on how you draw it, they have, from theory, they have exactly the same target, measured second leg equal to the first one. So we perfectly tagged that one, we consolidated for several days, usually that points to a resolution lower, but then we jumped higher. So nice rebound so far. Now the next question is, okay, should we be bullish the pound Aussie here? And the answer is no. First of all, because we're back testing now a previous horizontal support resistance area, so nothing here tells me that we can't just continue lower from here. Second of all, there is this descending channel with which we traded. Its resistance is not much higher than where we currently are. Okay. And if you also want a third reason, I still don't see the RSI producing something more than what I would expect, in a corrective move high. So I would remain patient here. If I had to trade this here and now for any reason,
Steve, I'm sorry to interrupt you. Good afternoon, everyone.
Good afternoon, Andre.
Can you change into a 2 hours time frame or a 1 hour time frame chart?
Sure, I can even change to a tick chart if that helps you.
No, it will not. Can you zoom in to that three tops that we have now recently, so we can see? I have a PIP.
RSI divergence here, you mean?
RSI divergence, and for those who are trying to long, I will avoid that. That as you said before, it's not the best price level to try a long on cable versus Aussie. There's also that kind of heads and shoulders now forming at that previous shorter resistance. So I believe there's an opportunity, but not for longs at this point. I believe there's.
No, I agree with you. I think it will be dangerous. I think
just to prevent those longs at this point, because certainly, or with a larger probability, we will buy a top at this point. So I will not be surprised, just to say, I will not be surprised to see a retest of 178.54, which is the most recent or the previous daily fractal support level. I will not be surprised with that, with the pullback to retest those levels. Again, we have that descending channel, and because I'm already positioned on a long, holding my long there,
By the way,
I will not be surprised to see.
It's also a good idea for somebody to have the big picture in mind here, and the big picture is rather technically interesting because we switched from being trapped within a triangle to being trapped within a megaphone formation.
Or megaphone,
Yeah, now within this megaphone formation, we've seen nice, orderly, channeled moves. Look at this. Channeled move higher, channeled move lower, channeled move higher,
It's a very nice
And
structure there. Yeah.
yeah, I mean, but now, I mean, bottom line, where are we at the moment? We are exactly in the middle of this megaphone formation,
Yeah.
right? So if I had to take a long-term trade here, I would. I mean, you know, if you wanted to take
above the structure, I believe that there will be a lot of triggers above that structure.
Oh, for sure. For sure, yes.
Yeah. And eventually it's just for one outside return and eventually to retest that megaphone formation bottom again. I will not be surprised with that, but
oh yeah, absolutely. Absolutely.
Yeah,
I mean,
yeah.
the long-term trend here is non-existent, right?
Yeah,
So
we are moving a new sideways.
yeah, we're moving sideways.
Process.
We're finding different ways to move sideways.
Yeah.
That's exactly what we're doing.
Yeah.
Now, having to do with USD yen, because that was also a question. I have no clue what to tell you having to do with the USD yen. One thing is for sure, I'm so happy that I've completely abstained from trading it as I've done with Euro USD. I mean, one of the best things that you can do in the market is learn when not to participate in a market. And I think I've become rather good in doing that. So I've completely abstained from doing that. I can only give you some levels, and I can tell you one thing for sure. As long as we trade below 109, 109.20, there is absolutely no risk reward for you to be long. I can tell you that much. So, gun to my head, if I had to do something with the USD yen here, it would be being short. But I have very, very low conviction in that. That's why I'm not doing anything. And you know, USD yen, I was quite enthusiastic by the fact that it was looking like it was breaking finally below a symmetrical triangle that had been in play since 2015. So it's like a 4-year symmetrical triangle. But I immediately said after a few days that, listen, we broke below this symmetrical triangle, and what have we ended up doing? Absolutely nothing. I mean, we're consolidating, and that's usually not a good sign, because usually when you get a move out of a important formation, you expect the market to produce follow through, and in this case, that's absolutely not what has happened. So USD yen is being a victim. Also, the fact that it's very hard to trade is the fact that it's being a victim of its of the loss of correlation, of the usual correlation that we've had between what yields and the risk assets were doing in the past. And now we've seen a decoupling in these correlations, and USD yen is a little bit torn between trying to follow to things that are not moving in tandem anymore. Okay, the yields and risk assets. Plus, there is no question about it, the USD yen has been for several years, and everybody knows that, quite a manipulated currency. So my personal suggestion is, I gave you a level that is quite important, but my suggestion is, why do you want to do that yourself and try to trade it, right? I mean, there are better opportunities out there. Why would you want to be involved with something that trades like this? That's my personal point of view. Hamid says, Erdogan said today more to come having to do with rate cuts. I'm absolutely certain, mate. I have absolutely no doubt that that's the case. That was the start, especially if they manage to hold the currency in check after this major cut. I'm pretty sure that we're going to see more, and I'm pretty sure that we're going to see more fast. Now, there's also a question about the euro pound and having to do with the euro pound. You know something? I think it's a better idea if we have a look at the euro pound on the 4-hour chart, because it's much more obvious here. So, euro pound, question number 1. Was that enough of a move lower? Might have been. I would be closely monitoring this area, 89.50 to 89.60. I know that we're currently trading like 2-3 pips above it, but I don't care what we do within a 4-hour candle. I mean, I want to see how we close the day, because if for some reason we get rejected from here, then this can simply be a retest of a broken head and shoulders neckline before continuing lower. Okay, but if we do close above 89.60, I think that, disappointingly enough, that might have been it. Okay, I mean, we had like an ABC move lower. I would have expected a stronger correction lower, and we might still get one, after such a prolonged move higher, but it's not impossible that that was it. Okay, so I would be quite careful here, and as I said, seeing how we close the day and of course the week is rather important. This is also another chart I updated yesterday when we were actually breaking above this channel. This is the USD Swiss, by the way. I pointed that out and that we might see continuation. We're already approaching the previous high, and I think we might see more upside from here. More likely than not, in order to see a decent continuation, we would need to see the Euro USD break below the previous lows at 111. Is that likely to happen pre-Fed? It's not unlikely, I can tell you that much. I mean, the fact that yesterday, despite the reversal high, we ended up closing almost unchanged on the day is definitely not a good sign for the bulls. The bulls were, in essence, attempting to put on a very nice reversal that would send a signal to the market, but they failed to hold by the end of the day. And seeing a stronger US GDP print today, I think there is a big danger for the Euro USD to end up indeed breaking lower. I mean, we indicated yesterday that it's trading in a very heavy manner. Then the ECB failed to give the market what the market was hoping for, which was a more obvious, a more thought of timeline having to do with easing. So the market was somewhat disappointed from that. But despite that disappointment, that wasn't enough to produce any real bounce from the Euro USD. So, it's still trading heavy with just a few pips above the previous low. I think the Euro USD is in danger of breaking down pre-Fed decision. Okay. So if that happens, the USD Swiss should also continue higher. Andre, Polly, which of you wants to take over for the next 8 minutes and share some stuff?
I can show some charts. I'm not sure if Polly have something relevant to show.
Paulie always has something relevant.
Of course, we have always something relevant. But I'm just something. No, I have a few charts there, but I don't.
Show us some irrelevant.
Some relevant,
irrelevant harmonic.
Irrelevant harmonics.
Okay, I haven't heard Polly answer, so go ahead and take the screen.
Okay.
Coach, do we have an interview in 8 minutes, by the way?
No, you were my interview today.
Oh, okay, perfect. So that means
and you know what? Like it or not, you're my trading warrior brother from here on out.
I wasn't yesterday. I just started.
You have been for 2.5 years, man. Okay.
Yeah, okay. Now we agree.
Okay, you could go, Steve. I could hang with Andre here if you have to go.
Andre, that means that there is no pressure of time. Actually, go ahead.
Yeah. Okay, just a few
Thank
charts
you,
and
you're welcome, buddy. Have a great weekend, Steve.
You too.
Thank you. Okay, Andre, let's see some relevant harmonic patterns here. I'm curious what you have in the S&Ps right now after yesterday's break. If you have anything there, call me selfish.
No, I published that chart yesterday. I was, and I still believe there's a possibility. For me, there's always possibilities to trade higher and lower because I search for those patterns, and I have always something above or below. At this point, this is a 4 hours time frame chart. I see a possibility to trade at 30.55. So this is the limits to form another shark pattern above, which may force by default a retest of the previous structure. So it will search for Fibonacci levels. But we have also something here that we can see on a lower time frame, on a 2 hours time frame. And I search always for patterns, and I'm constantly trying to monitor those events. I will not be surprised to see an head and shoulders here, rejecting to trade above this daily fractal resistance at 30.19. Actually, we need to adjust this level at the previous structure highs. This fractal at 30.24 at this point adjusted. So breaking these levels will open the window to form those patterns above. At this point, I will not be surprised to see this acting as a potential, let's call it an orthodox heads and shoulders formation. Well, and we have, let's say we have the neck at the 200 moving average.
Yeah. It'll take you down to what, 2960-ish, 70.
We can measure that specific, at least in my point of view. I can try to share my projections. So it's a 200% Fibonacci extension from the head to the neck. I use the body candles to project those prices and to project those levels. So 2978 each. So this is the default projection for one eventual violation of this next zone. Obviously, that will open the window also to retest these fractals, these previous structure support levels. So this is my view on S&P. But as I said before, and let me try to give you my daily picture here, because I believe I've shared that among our community previously. I'm searching for the ultimate or the extreme extension of this last swing, the one that brings me this monthly fractal support. I will search for that swing at between the 161 and the 200% Fibonacci extension. This 161 extension here, we are almost there, 3120 and 33. I was pointing to 3315, so 3309 is my 3315, 3309. It's my projection for one eventual pattern that will complete at those levels.
Okay.
The pattern will complete there. Okay, Dale, I remember perfectly. We were trading at this bottom, and I was saying to you, if this was a 15 minutes time frame chart, I have no doubts the market will retest these highs based on the Fibonacci extensions, based on the Fibonacci fibs that we have here inside this corrective structure. And I was telling you, okay, it will take long time to approach that level, and as we can see, it takes a long time to approach that level, and we are now approaching the 161 extension. So I still believe there's room to trade above. There's always room to trade above on S&P. It's an extremely bullish supermarket, so I have no doubts that will happen in a matter of time. On a lower time frame, I still focus on the probability for that head and shoulders to develop. I want to go back into euro versus dollar, and please interrupt me and force me to move on, Dale, because sometimes I stay stuck in a specific chart and I don't move further.
You're great the way you are. Don't worry about
so 4 hours time frame chart. I want to call your attention for patterns. That is my stuff. I don't trade based on fundamentals and what I hear on sentiment, on social sentiments, or any other approach that you can have to trade the markets. I always use the patterns the market is offering me and it's printing me. I don't care what the consequences will be for the pattern. I apply a risk strategy to trade them, and I repeat that process for the next 500 or 400 trades. Double bottom here, and if let's clear this line here, let me delete that trend line, and we can spend hours talking about how to draw a trend line, how to identify the structure, whatever. So usually when I see a double bottom, if that's the second bottom respects the lows of the first one, I always like to use that as a potential trend line, not a trend line, but a pressure level or a pressure line that usually the market will try to respect. So as we can see here, the market, not the bottoms of this structure, but ultimately the market has retested this trend line here. Let's not call it a trend line. Let's call it, what can we call it, Dale? I don't know. Let's call it something, but it's not a trend line because I don't identify this as a trend line. We have these
Speed line? I call those kind of like
eventually,
speed line.
eventually it's a speed line, exactly.
Yeah.
We have this trend line here covering those bottoms, covering this structure there, and the violation of that structure trend line there. So, but this is not a trend. This is not a trend line for me. So, but it's a speed line. Let's call it a speed line. It has been retested yesterday after Draghi event, and actually the market has found some support there at 168 extension, filling that pattern, and retested that level. As soon as the price starts to pull down or to pull back from those levels, I was expecting, okay, eventually it will fail to recover above, and will fail to recover above those fractals, and it will keep trading lower. What we have below is the default, as I mentioned before, and a few days here on this webinar, the potential breakout from these edge and shoulders formation that will put the price trading at 109.98. The 200% Fibonacci extension from this fractal support, daily fractal support, to the weekly fractal resistance. So that an extension at 200% Fibonacci is a default target for that pattern. Let's wait and see. At the same time, we have Dixie, which has printed a very similar behavior, obviously. Let me show you that on a 2 hours time frame chart. So this is the shark pattern at 168 extension, and yesterday Dixie has approached that Fibonacci level. At the same time, euro dollar was approaching that crab pattern, and it has been forced to pull back. So it has failed to achieve the default target or the minimum expectation for the pattern, and it's now trading higher. So I will not be surprised to see this acting as a potential third drive, Dale. I'm not sure.
Yeah, until you pulled that chart up, I didn't even notice that. But that, that's the first thing that crossed my mind.
Yeah,
I would say
develop.
Yeah, but I would say that low that we had, it was actually kind of like a head and shoulders you showed on Euro. It exactly tested that low there on the Dixie.
Yeah.
So I mean, that's the bull case. If we ever take out that low, then it's over. From here, I don't know. I mean, it's a top pick. Yeah. I just don't feel like it's ready.
No, me neither. Me neither. I think there's always obviously a possibility to retest that monthly fractal, and to wipe that fractal, to trade above that fractal, and this is the 224 extension. Usually the market will feel some pressure there.
Yeah.
If that will be enough to produce a significant fall from there, we never know about that. And that will depend also the structure the market prints here, because if the market starts to move sideways, eventually we will have a short to retest this structure here. That let's wait.
And isn't that the previous high, 98.40 or something was the high, 98.30?
Yes, it is. Yes, it is. This is a fractal 98.37. It's nailing the previous structure high. So there's also a possibility to wipe those highs, to trade a few points above.
Right.
There will be a lot of stop losses positioned up there, and a few points. Yes, it will, and eventually me also, because with a different measurement, because this pattern requires a 50% retracement pullback. Okay, so if that pattern ends up being a reality, we can expect a 50% pullback. So a retest of that fractal and weekly fractal daily resistance levels now as potential support. So that will not be a surprise for me, a retest of those levels. Based on this reward, or the potential reward for the pattern, I have a lot of space above to use to measure my risk, as you can imagine. So I don't need to put my stops right above the monthly fractal. I can use I have more space there that allows me to create a scenario or a motive to engage in a bearish momentum. If that offers me other signs once we approach that level. So,
okay. You have anything popping up for US dollar yen of any interest? If not, you
yes,
could go to whatever else you want to.
We are sure, no issues. You can
Because it's quietly
suggest.
creeping back up to that 109 major resistance. So I was wondering what you were seeing. Oh, head and shoulders.
Well, I still see this, and I show that. Let me try to put that trend line here. I'm not sure if I have it on a higher time frame.
It's a nice look, the way it cut through that channel with authority.
Yeah, and we have these. I have these. I'm not sure if everyone shares the same.
110.
No, it's a daily. It's a daily. I need to cover that. I need to cover those daily body closes, those previous body closes there. Okay. I remember last week we were trading below those fractals. We were retesting this trend line or this potential descending trend line at at those levels. I was expecting, and I shared that possibility to form the right shoulder and then the violation and the recovering above this virtual trend line will increase the probabilities to trade even higher. So based on what I have and supported by Fibonacci extensions and and measuring the potential target for the edge and shoulders or the inverted edge and shoulders, that will force the price to search for the 200 daily moving average, 110.54. So this is the default target for the edge and shoulders, which will put the price retesting these previous highs and previous structure support levels. So previous structure resistance and support synced with the 200 moving average, it's a possibility. Then we have also this eventual shark pattern, which can extend to the 224 extension, 224 above. So let's see how the market behaves at that point. So let me just measure, let me put there a Fibonacci retracement here.
Andre, let me ask you on your individual service, do you mentor people and teach them harmonics?
I used to. Recently, I have not much time to do that. But I keep providing people with some opportunities, and I help those measuring the risk for their trades and learning how to perform with how to use their platform. A lot of traders don't know how to trail a position, how to cut into partitioning, to use a partitioning system or strategy to manage their trades. So I help them when I can on those processes, but I'm not mentoring, I'm not guiding them, at least for now.
Yeah, you're a great candidate for our education.
I used to, and I like to, because that helps us to keep the path, you know.
I mean, you know, we're producing videos, educational videos, and harmonics is a pretty complex way of well, to people that don't understand it, to you it's second nature, but to people that don't understand it, you know, they definitely need instruction on it. I hope you make some type of video, educational video on harmonics. I'll buy it.
I'm trying to produce one, because I'm not sure if we can talk about this, but I'm trying to produce some educational content related to harmonics. I'm not sure if it will be published on ForexAnalytix. I believe so, but let's wait and see. There's always surprises on our team, and we are always working on something great for our subscribers. So let's wait. But we're still working.
So you want to wrap it? I was going to ask you to take a look at gold, but Swiss is fine.
I want to wrap with Switzerland franc, because it's one of the charts that I'm following at this point. I've been kicked out from gold, so I will not look into gold until the next week.
Okay.
I need gold to develop into another type of structure in order to provide me information. So
Yeah,
I have
so
I have no
yeah.
data at this point.
Sometimes you have to let markets reset and leave them alone.
Yes. I can give a suggestion to those who are following us and to those who are our subscribers. We have Gregor's charts on Elliott wave perspective. I will keep following that chart on a 4 hours time frame chart from Gregor, which is an awesome chart. It goes in the direction, and actually let me try to push those, because when we talk and we don't have a picture, sometimes it's difficult for our viewers to get familiar with that, to get a clear picture. So let me show you the gold picture from Greg, and my computer is extremely slow at this point.
Goldfinger.
Let's reprint that.
He's the man with the golden touch. He loves gold so much.
Is that 007 music?
Yeah.
Yes, it is. So let's finish with those charts from Greg. He's not here, but I can try to share those views. So we have these potential edge and shoulders there. So I can jump into harmonics to show you that lower time frame chart on a 2 hours time frame chart.
1400, yeah, and then a new high.
It's synced with the view from Greg. So we have these inverted head and shoulders. I just took the wrong trade at this point. We have a bullish 5-0 pattern there. I was trying to buy that market at that point. But there's always two possibilities, and the market is trying to form these edge and shoulders. And very similar to the previous trade that we take on ForexAnalytix. So I pushed this trade at 5-0 and we closed the trade above. So we have this bullish momentum as a profit trade. Then the market has printed another shark, another 5-0. I was trying to engage into a similar behavior as expected previously to retest those highs, but the market has failed. So now, and based on what we have here and based on the default projection, I will not be surprised at 4,000.
You must have to buy a lot of diamond rings.
Why?
Because you're always getting engaged.
Yes. Yes, I'm
this
constantly
diamond ring doesn't
engaged.
shine for me anymore. And this diamond ring doesn't mean what it did before. But if you've got someone you love, that's true. Let it shine for you.
We need to jam some. One of those
Gary
days
Lewis,
we need to
Gary
jam.
Lewis and the Playboys took some people back. Yeah. Anyway,
years back.
Yeah, when you were just, in diapers.
Teenager.
Yeah, bad diapers, bro. All right.
Yeah.
I'm the dinosaur of the crew.
Wrapping with this chart, Dale, to finish. Dollar versus CHF approaching the weekly fractal resistance.
Yeah.
99.51. There's a lot of questions about the parity on dollar versus Switzerland franc, but who cares about the price? I don't care about the price on my charts. I don't even remember the price of specific pairs. I trade based on patterns and specific Fibonacci levels. If you ask me where is positioned at the 224 extension on dollar versus Switzerland franc, I can try to answer that, but usually I don't use the price to guide. So we need a price for sure, but I don't care about the price. But basically, what I want to share here is a potential inverted edge and shoulders that can put the price trading at above parity, as I shared before with our community. We are also approaching these lower time frame eventual shark patterns at 1618 extension, 200 moving average also approaching. Note that this is a 12 hours time frame.
Your dollar view also supports this too, right?
Exactly, because I believe there's a possibility to form that shark pattern at 1618 extension. Dollar Dixie will trade above a 224 extension, will form that 4 hour time frame chart or it's a daily time frame chart or a 4-hour time frame chart, it's the same, but basically it will force dollar to retest that structure also above, printing that sharp pattern at 224 extension. So let's wait and see what the market will produce until there. So as I used to say, I don't think, I react to what the market is offering me. So if the market prints me a pattern with a friendly risk reward approach, I will try to do my best to give my myself the best entry possible to try to take advantage from that pattern. If there's nothing, I prefer to stay away.
Good stuff, Andre.
Thank you very much. And
good
have a
stuff.
nice weekend, everyone.
All right. Have a great weekend, Andre. To really have access to Andre's work, which I think is elite. And I see a lot of people, I've interviewed over 1,000 traders over the years, and Andre's excellent and was a great addition to our team.
We are a great team, indeed.
I challenge anyone listening to my voice right now to please direct me to a site, a trading team that can do what we do ethically. And with that being said, thank you, Warriors, for hanging out with us this week. Do your homework. Friday's a great day to subscribe. Gives you all weekend to familiarize yourself with the platform. And most of all, don't just count your pips, count your blessings. I hope you feel that faith is a blessing in your trading career. We do our best. And with that being said, have a great weekend, everyone. Enjoy. Adios. And see you guys next week for the Fed. Take it easy. You're very welcome. I'll see you, Mario. See you, Marcio, Philippe, Shaitan, Ite. Have a great weekend, my trading warrior brothers and sisters. Adios.